Yo, what is up, guys? It is your boy Dylan, and so today I'm gonna break down a very simple volatility 75 strategy that has worked for me for countless times with proofs of withdrawals and so much and so much and so much. So I'm not gonna waste you guys' time, right? First things first. The first things. This is just the main four things that have helped me to trade properly. The first things first is over leveraging. So what I mean by over leveraging is that, for example, if you have $100 account, you cannot expect to risk to maybe open a position with one full lot on $100 account. That is ridiculous because you're risking a lot. Try risking 1 to 3% of your account. And then the second thing is revenge trading. Whenever you lose, don't come back with a bigger lot size and try to revenge trade, because the market does not know that you lost and the market does not owe you anything. The market does not owe you anything. And then the third thing is trading every candle. So what I mean by trading every candle, most people that get confused, especially with this, let me just show you a quick example before I hop in to what I want to explain today. So as you can see, I just moved on to the 4-hour chart, right? So by trading every candle, I mean specifically, you see this choppy area here. This is a very huge consolidating right here. So many people would have traded, many people lost here, many people made money here, many people lost again because it was very choppy. So try to trade things that are very visible to the eye, things that you can also see that are possible, trades that are, what can I say, easy to spot. Try to trade as keep it simple as possible. And then the last thing is no defined strategy. No defined strategy, with meaning that you don't need RSI, you don't need so many indicators, you don't need so much for this actually, because you just need your own brains and your own knowledge to do things. So let me show you how I trade V75. So as you can see, it's in a downtrend. This is on the 24 hours. This is on a daily chart. So like I've already drew this trend line. If you try to notice, this trend line is being respected so many times. So here's an example. It was respected once, right? It was respected twice, right? Now it's coming back for the third attempt down here. And then here's also another point. There's another support. Here's also another support. All right, so how did I manage to like draw these trend lines? So here's our over trend line, this one and this one, right? These are our main support and resistance, and the market is moving in this current range right now, right? So as it's moving in this range, I actually drew another trend line, right, from this touch point, from this low to this lower low, so that I can see if is it gonna respect, is it gonna come back. I was hoping for it to come back maybe when it reached to this point. I was expecting it to like maybe go down, retest, and then come back to the same area, but it did not do that. Instead, it's shooting up, aiming for the sky. So here's a quick example of how I manage to scalp and eat these forex signals and strategies or whatever, because I call them my own signals. You can call it a strategy, you can call it whatever, right? So as you can see, the market creating a lower low, right? But at the we're at this current lower low here, right? And one thing I want you to see is that we have a trend line here. This is the first touch. Here's the second touch. Here's the third touch. Here's the fourth touch, and there's a break. Here's a break out of that touch, right? So how did I actually manage to open this trade that I'm currently in? This V75 trade that I'm currently in. I'm just targeting this high right here. So how did I manage to actually get this trade? So first things first, when the market came to this area, as you can see, we have a double bottom here. We have what you call a double bottom. So let me just put it in a range. Let me make it easy for you guys to see. Let me make it easy for you guys to see. Right, we're in that range right now, and what the market just simply did, it came into this range, one bottom, another bottom, double bottom, and then breakout, and then waiting for a retest, right, and then shoot up, right? So that's basically how it's moving, right? So how did I actually manage to catch this? So first things first, right, is the double bottom, right? You can actually trade this breakout and then perhaps try target from here to here. Remember, this is on a daily chart, so these trades will take time. They'll take weeks. They can take 2 weeks to 3 weeks, depending on what's going on, you know. But just this move alone can give you a lot of money, right? Now let's move on to my entry for today. How I managed to get this entry. As you can see, this fair value gap here. So the market went, it left this area, and it left a very good fair value gap here. And then there was also another fair value gap here, which was inverted. So I'll call this the IFVG, um, an inverted fair value gap, meaning that it failed to actually retest this fair value gap, because most people are now trading fair value gaps, right? So if it failed, right, it becomes an inverted fair value gap. So this is another confirmation that it is actually going to the upside, right? This IFVG area, right? And this fair value gap area right here. So if I go to the 8 hour chart, right? If you go to the 8 hour chart, let me just remove this one trend line so that I don't confuse people. If you try to look at it, right, this fair value gap came, it retested the fair value gap, it touched it again. But I want you to notice what it's doing here. It's failing to break below the fair value gap. It's failing to make it an inverted fair value gap like this one here. So this is another reason, this is another confluence that I actually got as to why I should actually go long on this position and not short, right? Volatility 75 has been going short for quite some time, and if you look at it on a weekly chart, it has been creating a very good low. Now we need like a lower high. We need something higher than the low that it has created, because you know what I mean by that, right? If you try to look at the daily chart, if you try to look at the daily chart and then actually zoom out, if you can see how many days it's been going down, right? And if you look at it on a weekly chart, it's actually created a huge low. We're now waiting for the lower high. So this is how you manage to see when the market is about to change character. So as the market is approaching this high here, this previous high, I'm expecting it to break this high and then change character. I'm waiting for a change of character around that area. So one thing, ladies and gentlemen, when you're catching these kind of trades, you need to wait and be patient. Try entering at the lowest point as possible. So let's say, for example, if you had entered this trade perhaps not even here, but let's say you would have entered it somewhere. Let me make it more simple. Let's say we entered it at this low here the first time it came to the fair value gap, right? You would have actually hit your TP, right, and actually waited it for it to come back again and watch how it behaves when it comes to the same area. Because one thing I know about the market is that it repeats itself. For example, here's a good example of repetition, right? I'm gonna draw a trend line from here to here, draw another trend line from here to here. I want you to see how the market behaves. Why is it that every time when the market comes to this specific trend line, it retests or rejects it or goes to the other direction, right? Simply because trend lines, you can use them as support and resistance. So this is just a simple strategy and effective strategy on how you can trade volatility 75, right? Not over leveraging. Know everything. Your risk management plays a very huge role, and try keeping it simple as possible, because if you complicate your trading, it's not going to be simple. You only complicate yourself and you won't know whether to sell or to buy, right? So another reason why I also entered this trade was that if you go on a 4 hour chart, if you go on a 4 hour chart, let me just show you something here. On a 4 hour chart, right? On a 4 hour chart, right? I want you to see how it's rejecting this fair value gap. This fair value gap has become like a support, a sort of support, because every time it comes, it rejects. Comes, rejects, comes here, it rejects, comes, it rejects, comes, it rejects, comes, it rejects, it came again. So, and another reason why I entered this trade was because of how choppy it was getting here. So I was hoping that the market will actually engulf this, right? So as you can see right now, it created a new fair value gap, a new FVG. So for most of you guys who have already missed this trade, I would suggest that you guys should wait for it to either come back to this FVG area. Let me just change the color. Come back to this F. Let me type it down. Okay, FVG area, or wait for it to break this structure here, right? You can wait for it to break this structure here, because when it does that, right? Because when it does that, you can be able to now wait for it to go up, right? Obviously, it's going to reject certain levels because there's an order block around this area, and then it comes down, right? And then it's going to continue all the way up, because that's how the market moves, guys. It will never repeat. It will never forget repetition, because here there's an order block, right? There's a simple order block here. So that's another reason why it has to reject it, because imagine it keeps respecting support and resistance. So that's how the market moves, guys. So it has to come to this area, order block, of course, respect the order block, respect the orders, come all the way down. And if you try to realize as well, if you take it all the way from here with the Fibonacci all the way to the high point, this is around the golden zone. This is around the golden zone. This is around the golden zone. From this low to this high that we're anticipating, this is around the golden area, which is half of the Fibonacci, which is the discount, which means you're approaching the discount area, and the fair value gap is actually in the discount area. So if you actually manage to get it inside the fair value gap, which is a bigger bonus, because when it comes all the way to this fair value gap, you'll be able to scalp and get as much as you can from this swing high. So anyway, that is just a breakdown of how volatility 75 is going to move for the past it's going to move for the next couple of days, couple of weeks. And shout out and peace.